The following is a presentation of TFNN. Live at TFNN, The Money Masters. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, The Money Masters.
Good day, Money Masters and Treasure Hunters. Welcome to the July 8th terrific Tuesday edition of the Money Masters Show. I'm your host, Steve Rhodes, author of Mastering Probability, the daily newsletter service that is the intelligence for creating financial freedom. Hope everyone is off to a great start this morning. Let's make sure we do all that we can do to have an extraordinary day. Now, today's a special day. It's a special day, and I want to say a very special thank you to everyone at Interactive Data Corp, the trusted leader in financial information, best known by each of us as eSignal, for their extraordinary efforts in launching Tiger TV from within their trading platform. That's right, folks. If you are a subscriber to version 12 of their system, you can actually watch Tiger TV in a window within inside their system. It was a vision of mine that I began working on quite some time ago, and that reality all made possible because of the teams at TFNN.com, to Tommy, Mike, for all of their hard work, the team over at Interactive Data. So from the bottom of my heart, thank you to each of you that had a hand in making that vision turn into a reality. So today it's a special day, and for all of you folks that have upgraded to version 12 and listening in here at TFNN.com, thank you so much. I wish to say thank you and greet you from all of us here at TFNN. Stay tuned to us all day. We've got live programming, takes you through to the 6 p.m. hour out here. So we'll, as our leader likes to say, bisect and dissect these markets for you. Of course, this is a interactive radio show, interactive data, interactive radio show. That means that you can give us a call at 877-927-6648. Give us a call. Happy to take a look at your stock chart, your currency pair, your futures contract, your commodity, your ETF, whatever it is that you're trading, whatever time frame it is that you're trading on, and I'll do the best that I can. Again, our call number, 877-927-6648. My name is Steve Rhodes. I'll do everything I can to teach you how to master the tools for trading. That includes tactical tools such as A to B equals CD patterns, Fibonacci expansions and retracements, Gartley and butterfly patterns out there. And, of course, we always take a look at Japanese candlesticks because they're the signs that the bulls and bears make for each of us on every trading session. We took a look at that during the first hour. We got a message here about the bears and their intentions on taking on the bulls, as we saw it close below a hammer candle on a 120-minute chart for the S&P futures contract out there. Let's go. It is Terrific Tuesday. This is Tiger Financial News Network. I'm Steve Rhodes, and welcome to the show. Welcome to the Hotel California, because once you do check in, you'll never check out. Right now, we've got the Dow trading up 112 points. She's trading at 16,911. S&P down 12 points at 1965. NASDAQ off 47 at 4404. Russell down 15 points, trading at 1172. Goldilocks, the gold is up $6 and change, trading out at 1323. Silver's up 13 pennies at 2115. No movement here in light sweet crude. It's trading out at 103.51. All right, we've got some volume inside the market. Let's first take a look at a intraday chart here for what's going on inside of the ES Mini. We can see coming out of the gate here, this is a 10-minute chart out here. Between 9:30 and 9:40, we saw 107,000 contracts trade hands. We're seeing volume pick up here. Now, let me put this, well, it's a 10-minute chart. I'm not going to put the relative strength indicator up here. But we have seen some pretty decent volume here, much more than the selling that we saw yesterday at around this same time frame as the market opened up. If you're watch us on Tiger TV, the bottom of my chart is showing you the different volume patterns that you can see out here. You can see we have increased volume, so we have increased momentum to the downside inside of the ES Mini. Now, let's try to piece all of this together for you. Let's go take a look at what's going on inside the VIX Index. Let me give you parameters for you to be paying attention to today, especially if you're a new listener in at TFNN.com. You're probably going to learn some new tools. Certainly going to learn. Well, I know you're going to learn new tools out here, certainly ways that I take a look at the market. Right now we're looking at the VIX Index. The upper portion of my screen, that's the VIX Index. You can see the 50-day exponential moving average. That's the red little squiggly line going across my screen out here. So all my charts are fed by the eSignal platform. I use three different charting tools out here, those being eSignal, instant windows. That's what we're looking at next. That's what we're looking at right now. And then I use the Ninja Trader platform. You can see the 50-day exponential moving average is priced at 1206 right now. The VIX index is trading at 1218. If today it closes above 1206, and I don't mean 1207, it's got to close above it with a little bit of conviction here, then you're going to see some real carnage in the market, or we should see some real carnage in the market. When the VIX trades above the 50-day exponential moving average, it's where the most destruction is done. If you're watching us on Tiger TV, you're seeing some shaded boxes out here. Those shaded boxes represent when the VIX gets above the 50-day exponential moving average. The bottom quadrant of the chart is the S&P 500. It shows what happens to price during those same time periods out here. So this is going to be a very important area. The close today inside the VIX is going to be very important for us to be paying attention to. I always also like to take a look at what's going on inside of the euro Japanese yen. Why? Because it's the one currency pair that tracks the U.S. market better than any other currency pair that's out there. And if we take a look at the euro Japanese yen, we can see that it's moved down to an intercession low of 138.10 out here. I'm going to switch to a intercession chart, 120-minute chart in a moment, just to give us a better idea as to what's going on. But what you're seeing here on Tiger TV, you're seeing a couple different Gartley patterns. This is a 0.786 Gartley pattern. This is the yellow shaded pattern here that is in place. This is a confirmed pattern. What do I mean by a confirmed pattern? It means the lows held. We saw price move up. In fact, they got to the dead cat bounce. What does that mean? That means that it did a retracement from its swing point high of this pattern that was on March the 7th down to the low that came in on May 29th, and it made a 0.382 retracement. This is a confirmed pattern. Why is that important? It's important because if this pattern fails, because it's been confirmed, not only will it make what we refer to as a 100% move of a move, that means going back to another swing point where this pattern actually began. That's on the trading session of February 4th. That's down at a low of 136.22, but it'll also turn into a butterfly. That's an expansion pattern. And why is that important? It's important because from a directional standpoint, the direction of this currency pair, it typically tangos with the U.S. stock market out here. So that's what the longer-term charts are signaling to us. This also has a shorter-term Gartley sell pattern. This is a 0.618 Gartley sell pattern that is in play and is working out here. So we know what to watch for. If we go down and take a look at what's going on in the intraday chart out here, if we take a look at the euro Japanese yen, this bodes well now for the bulls. This is putting this together with what we're taking a look at inside the VIX index. Because the VIX index, I'll go back to that chart one more time so you can take a look at it, so you get a pretty decent feel as to what the markets are doing here. This pattern here, this little yellow pattern that you're looking at, this is also on a shorter-term chart, a 120-minute time frame chart. This is called a Gartley buy pattern. You can see nice Fibonacci numbers. We utilize Fibonacci numbers here because they oftentimes help us identify price targets as to where price is likely going to move to. In this case here, you've got a retracement level, 0.786, and tomorrow I'll go through a little analysis, or I'll put together a couple slides or what have you, just simply so that you can understand how these Fibonacci numbers came to fruition out here. What you need to know is 2.618 is a Fibonacci number. 0.786 that's an expansion. 0.786 is a retracement out here. 0.382 is an expansion. And what we have here is we have a completed A to B equals CD to the downside as price moved down into that low into the session that we're in right now, 2-hour session. The currency session ends at 11 o'clock this morning. If I take a look at an A to B equals CD tool out here, the A point's going to be the high at 5 a.m. That's on July 3rd. The B point's going to be the low out here that came in at 5 a.m. That's on July 4th. And the C point, that took place right up here at 1900 hours. That's at 7 p.m. and that is on July 6th. Take a look at the 1-to-1 A to B equals CD, which was projected at 139.12 out here. I'm sorry, 138.12. The actual low that came in was at 138.10. You got to like that. 2 actual pips out there. How does that work? Well, now what's important? Well, what's important is take a look at the candle that is being formed. If the session were to end right now at 10:15, which it won't, but if it were, this is a hammer candle. A hammer candle is a reversal signal, and when that takes place at the end of a pattern out there, that's a very important message. Now, we can also see by using a 14-period relative strength indicator, that's what's down on the bottom of the chart out here. Price has also moved into what's considered to be an oversold condition. Price works its way off by doing one of two things, by either working sideways traveling sideways or bouncing higher. Right now, when it comes to this currency pair, you can see it is bouncing higher. It is in the process of forming a hammer candle. Now, when I hand this show off to my man Basil Chapman out here, and folks, he'll teach you how to take a look at the market, take a look at wave patterns, take a look at the Chapman wave out there. That's a proprietary system. When I pass off the show to him in our 9 hours of programming here live each day at TFNN.com, we'll come back. We'll take a look at the candle. It'll be 2 minutes before the session closes and get a pretty decent feel as to what's forming out here. Why is this important if this does turn out to be a hammer candle? It says that low is really critical because it closed below that low, and if you're long, you're wrong. If you're expecting the market to bounce, well, it won't. It'll be directionally saying the market wants lower prices. Whereas, if this hammer candle holds, if during the session of 11 to the 1 o'clock session out there, you see higher price, meaning confirmation of this hammer candle with price moving higher, what you'll see is a market bounce. And what does that mean? Well, then what that means to me is what we'll see is we'll go ahead and we'll see this VIX index hold one more time. At least one more time. Because you see, since the trading session here of April the 16th, remember the markets made a low out here on April 15th, April 11th, April 15th, right around that time frame. If you take a look at the VIX index on April the 16th, it closed below the 50-day exponential moving average. If I blow that up on the screen out here, you'll see that was the first close below the 50-day exponential moving average, and that level has held as resistance since that time period. It's been tested and rejected several times. The question is, will today be a rejection? And I don't know the answer to that question. I do know we'll know the answer at 4 p.m. And if it is a close above it, not by a penny or two, but if it is a close above it, what that says is we're going to see a deeper retracement in the market. The kind of retracement that probably brings about a scary kind of a low. Another bottom in the marketplace. We'll probably see some high volume inside the Qs, and that'll be our signal that if you were short or are short, that you probably want to really be able to tighten up those stops. So we know that those are the parameters that we really want to pay attention to, that we are looking at for the day. Now, during the last hour, during the last program, I wasn't able to get to Gilead Sciences for one of our guys in the Tiger's Den. So for us, let's go take a look at Gilead Sciences, GILD. He'd like to know what's going on inside this equity. He's looking at this, I believe, for an intermediate term or short-term to mid-term view of this equity. So let's go take a look and see what it's doing. Pulling back a little bit this morning. Volume so far on the retracement here, 2.7 million shares out here. I'm going to take a look at a stock chart. When I take a look at a stock chart, I take a look at two things. Got two eyes. I use them both. I take a look at volume bars to see where those volume bars are at. And I also take a look at swing points. If we take a look at Gilead Sciences, one of the things that it's done here is it's broken out above recent swing points. Let me put the line on the chart out here. That's right here on this candle session from January 22nd. That price high is $84.40. That swing point, we'll come back after we get back from this break here. We'll continue to look at Gilead Sciences. If you're long this equity, you want to see price stay above that 84.40 level. When we get back, we'll go take a look at volumes. We'll go see what else we can find out about ticker symbol GILD. We'll be right back, folks.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Wouldn't it be great if you could get a red light, green light indicator that gives you signals on 25 different future contracts? Now you can with Taz Signal Box. This red light, green light market profile system dynamically updates 24 hours a day and provides you with important trend and trade signals on 9 different commodities, 9 different indices, and 8 different currencies. Right now, you can receive a free 2-week trial to Taz Signal Box. For all the details and to find out how the Signal Box works, visit the front page of TFNN.com.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow's off 118, S&P down 12, NASDAQ off 57 points. Goldilocks giving back all of its early morning gains. It's flat right now. It's straight out at 13.17. We covered gold and silver. I covered both, I think, during the last trading hour out there. I kick off things here at TFNN at 9 o'clock each morning, and I indicated, we took a look at the market profiles, also indicated what was to beware of with regard to gold and silver, and it's those large commercials that are taking large short interest inside of those two commodities out there. That's the smart money, and we've seen again that gold just turn slightly negative here as we speak right now. We want to go back to take a look at Gilead Sciences for one of our tigers in our Tiger's Den out here. If you'd like me to take a look at one of your stocks as well, commodities, just give us a call at 877-927-6648. Let's go back and take a look at Gilead Sciences. So what I was mentioning first, when I take a look at any kind of a stock chart, my eyes immediately go to two different areas on the stock chart. Those two areas are previous swing points and high volume bars. Lows, highs, middle of the session, doesn't really matter. Where was the volume inside of an equity? Now, we're coming all the way back to the trading session of January 22nd, 2014, when Gilead was up at 84.40. We're interested right now as far as what is it doing at the highs. When those levels are taken out, you can see along the bottom here, we've also got a blue line, horizontal line going across, which represents the volume. It was actually 17,389,000 shares out there. Screen says 17,286. It's close. No cigar, but it's close. So 17.3 million shares. When you take out a swing point, And you can see that swing point had acted as a resistance level. There was a little reversal signal here. This was a bear separating line, this green candle on January 23rd. Don't get too caught up in the colors of the candles. Those candles just represent where price opened and where price closed. Instead, what you want to be able to do is you want to be able to read the signals of what the candles and what the messages are. So that's a reversal area. That says that is resistance at 84.40. You can see it was tested with a couple of high wave-ish type, spinning top type candles. Those are the trading session of February 25th and February 26th out there. Volume there, not enough to bust it up, 8.3 and 11.9 million shares versus 17. But what we did see here is we did see some wide price spread, somewhat wide price spread on July the 1st. Now we're into summer trading months, 11.5 million shares. But even with summer trading months, that's still a far cry from the 17 million shares out there. It broke through it the following trading session. You had a little bit additional volume, so it was accelerating as it was moving up and out of there. 13 million shares out there. What you'd really like to see on this retracement is you want to see that 84.40, because we could also say that's the top of a consolidation box. That consolidation box taking us into the time period back all the way to October of 2013 out here. So this has been consolidating for quite some period of time. And what's important about a consolidation? Well, when you break a consolidation, the target area is a measured move, which is equal to or greater than that consolidation. And in this case here, if in fact this is a consolidation pattern with the lows being in the $63 area, 63 to 84, let's use 64 to 84, you're looking at a potential 20-point move. Now, when you break consolidations, you like to actually see price come back and confirm that it wants to stay outside of that consolidation. So, Russ, inside the den out here from a short-term standpoint, you want to see it come back, test 84.40 because it has not busted on volume. It's had some accelerating volume during the holiday session out here, so that's pretty good. But you want to see it to stay inside there. If it gets back inside the consolidation, if it gets back inside that high, then that says, hey, this might have been a false breakout. And if it's a false breakout, if it can't bust them up, it can't bust them down. But what that really means inside this equity, and now we come back to that volume bar. And that volume bar on the daily basis says, hey, take a look at June 9th. There's volume of 23 million shares, and that was to the downside there. And that says that that is likely where price would travel to. That low of 78.50 would be very important for it to hold. If it holds that area of 78.50, then you go ahead and you stay strong and you stay long in this. But if it closes below that, there's been no floor, there's been no base that has been created out here, and it says that price could travel all the way back down to the bottom. And that's really what it's looking like to me on both the intermediate term as well as the short term. Short term is 84.40 is important. Intermediate term, it's important to hold that June 9th level of 78.50. I'll put this on a weekly chart out here. Let's see if there's anything else that pops up for us. Again, this is Gilead Sciences, G-I-L-D out here on the weekly chart. That swing point had 54 million shares. It was taken out with 45 million shares. Really not too shabby for the week ended June 30th out there and summer holiday sessions out there. But 84.40 is the key number to be watching, G-I-L-D. Right now, the Dow's off 112, S&P is down 12, NASDAQ off 56. We'll be right back, folks.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
If you're an active trader looking for that extra edge when it comes to trading and investments? Then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can't use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. Dow is off 128 right now. S&P down 15. NASDAQ Composite off 64 points. Let's get a feel for where the markets are headed. So in the first hour, as the market was opening, as we were taking a look at the ES Mini, we were pointing out the importance of this hammer candle. That's the hammer candle that had formed here coming into yesterday's close at 4 p.m. We saw a clear break of that hammer candle. That was at 10 o'clock this morning. We're now seeing a move down to the 0.618 retracement level. That's at 19.52. It's traded as low so far this morning here at a price point of 1956.25. So we take a look at just normal retracements, and that's coming off of the swing point low here that took place at 10 o'clock in the morning. That was on June the 26th. If we go from that low, which is 1936.25, up to the high that was put in here, that was on the trading session at 2 o'clock in the afternoon. That was on July the 3rd. Right now it's making a 0.618 retracement. On the 120-minute time frame, it's now poking its head down below the oversold condition of its time frame. That's what's going on the 120-minute chart. Let's go take a look at a daily chart for the S&P futures. Let's go take a look at the 4 futures contracts. We're going to do that because we have the use of our market profiles to give us an idea as to what's going on. These are areas of support and resistance. They include a volume analysis, and so it's important for us to be able to take a look at that. If we take a look, and we'll go back now to the S&P futures, what we are going to see is prices now starting to move down to what's referred to as the unfair high, old resistance. Resistance was broken. This really kind of goes right in line with the analysis as we took a look at GILD, as we took a look at Gilead Sciences out here. Once you break a level of resistance, old resistance should become new support. What happens if it fails as support? Then it says it was a false breakout. So a very key test is coming here inside the ES Mini right now because it's testing that area of 1954 and a quarter. Has it gotten down there yet? No, it's gotten down to 1955.75, but it closed today below 1954.75. That says it's now back inside the lower part of its market profile range. And that says the next key critical area would be the low of that market profile, or 1934.25. A move or a close below 1954.25, I think is the number out here. Today, it closed below that level, 1954.25. I think that's the number. Says we ought to see price move to 1946 at a minimum. And then it's possible we'll see 1934. It closed below 1934. It says this move off of the bottom out here, off of April 14th, says that move has now changed its trend. Can change back at any time, but it says that change in trend would be over. And then if we take a look at on the daily chart with changes in trends, if we take a look at just simply Fibonacci retracement numbers, we'll go from the low of April 14th. We'll take it all the way up to the high that came in here yesterday, July the 3rd as well, out here. We take a look at that, you'll see that the first retracement level becomes 1910. So if the ES Mini gets back inside the lower range, the target area has become 1946. If that fails, 1934. If that fails, 1910. But I would have to say, if all three of those fail, it really brings up the price level of about 1869. And here's the thing. The ES Mini moving back to 1869, and it'll seem like, because that's 100 points, a little over 100 points, off of the highs at 1977, it'll feel like the world the sky just fell. But it's really nothing more than a normal retracement. If we didn't pay attention to price, we didn't pay attention to what it was, and we were going to, what it was, meaning the instrument behind it, and we were just going to simply teach you about technical analysis and tools and normal retracements, that's nothing more than a normal retracement. But right now, holding support, which is old resistance, that would be bullish, that would be positive. That's what's going on the daily chart for the ES Mini. Let's go take a look at what's going on in the strong hands. The strong hands still being the NASDAQ. The NASDAQ here, we'll see so far today with 175,000 contracts. It's volume that's accelerating to the downside. The problem is, what am I going to really do? Benchmark it after Thursday's action or yesterday? Nah, pretty hard to do that. Let's pay attention to what's going on from a market profile. So let's take a look at expansions here. Let's look at expansions of swing points. Let's go and we'll take a look at the swing point high inside the NQ. That looks like the March 7th area, right around the 37, 26, 25. We go from that low to that high to the low that came in on April 15th, what we will see is that what the NQ has done is very close to the 1.618 expansion. Didn't hit it exactly, but as Captain Barbosa would say in Pirates of the Caribbean, we just simply use these as guidelines. And yes, he too was a technical chartist out here. 39.29 would have been the exact 0.618. We saw price get up to 39.16 yesterday. In essence, we have seen a 1.618 expansion of the NQ. Now, what we're also taking a look at, because in one trading day, this thing had gotten to the extreme overbought condition. If you look at my chart here, you look at the bottom of the screen, you're going to see that relative strength, that 14 period, in this case here, it's a daily chart, a 14-day relative strength index, got up to a price level in the upper 80s, 86, 87 or so. That is extreme. That's extremely overbought. That condition has to be worked off. That's what it's doing, and it's doing it very quickly on a daily chart right now back in the 64 level. So how do you put all this together out here? Well, the key level to be watching inside the NQ on its pullback is its old resistance level has not been tested as a support, and that's at a price point of $37.99.50. That is the level to be watching inside of the NQ. So the NQ, still bullish. The ES Mini, still bullish on the daily chart. We've got the numbers that we're going to pay attention to. How about the Dow? Let's go take a look at the Dow futures out here. The Dow, still bullish on the daily chart. You've got volume in the contracts, 175,000 contracts out here. The Dow has its daily market profile That's not the Dow. That's the NQ. You're saying, hey, Steve-O, you just did that chart. Thank you for reminding me. Let's take a look at the Dow. Sorry, let's just kind of, let's take back that last 60 seconds. Because now we've got the Dow, and it's a different picture. The Dow has broken through the support, old resistance of its market profile. It's now back inside the lower part of its range of its market profile. It's tested its point of control. That's the volume. That's the area where price is most comfortable with. That being 16,829. Excuse me, you're trading out right now. Need a little bit of water for the throat. It's trading out at 16,836. The close below 16,829 says 16,769. Whole different meaning if you close below 16,769 out here. Excuse me. What is that meaning? Let's go take a look at the retracements. Let's look at, let me get rid of the A to B equals CD pattern that's out there. Let's do that. Let's actually take a look at a trend out here. Let's put another tool. Here's the February 5th level. Let's use the February 5th level as a place to draw a trend line. And we're going to take a look at the trend. We're going to use that swing point right around the level of, I think I got to do it just like that. Nope, that wasn't right. Give me a moment here to delete that. Okay, let's come back. Let's use this trend. And we're going to use the low here of February 5th, right around the price area of 15,137. That's going to be the bottom of our trend. So this is a trend here. There's the uptrend that is in place right now inside of the Dow futures. And I would say if price breaks through the unfair low, the 16,769, it's going to be that trend line that's going to really help us understand whether or not there has been a change in direction and trend inside of the Dow. Now, we'll leave that trend line in place. Let's also take a look at retracements off of that low out there from February. So we'll go from that low to the high that was put in here yesterday inside of the Dow. Let's do that again. I somehow lost that. Give me a moment. Again, we're going to go from the low here. February 3rd is what we're actually going to use to the high here of yesterday inside of the Dow. And what that says is that it says really the dead cat bounce would go ahead and pull it right through that trend line. That would be at the 16,286 mark out there. So let's just focus on the trend line here next as far as where that would probably take us to in price, right around the 16,500 area or so inside of the Dow futures. So 16,769. Still in bullish to neutral-ish type territory inside of the Dow futures contract. Now let's go take a look at the Russell 2000. Problems in River City inside of the Russell 2000. It is now closed below, well, it is now trading below its old. Now, it formed a new market profile today, and that market profile today said its unfair low was 1175. That was support. It's still supposed to hold the support. We got a lot of time left in the trading session out here, so we'll see how the day ends up. But what it's really done, the larger market profile that's been in place here since June 25th, that's what it's trading below right now, and the Russell 2000 is definitely under pressure. Where is it the Russell 2000 is likely to pull back to? Here's where we'll go ahead and take a look at retracement levels as well. We're going to come all the way down to the low out here from May 15th. At May 15th, that was right around the level of 1074.20. We're going to come all the way up to the swing point high. That was put in here. That was on the trading session. Steve, why did I do that? Give me a moment here. I have sticky. I'm not going to, no, let's just, let me just come back here, and the mouse was sticking, so sorry about that. There we go. Okay. If we take a look at, it's almost down to the 0.382 retracement level, 1158.56. So the Russell 2000, weakest of them all as we speak right now. This has made a 100% move. It went ahead and tried to, if you go back and take a look at that equity, Gilead that we took a look at, similar kind of a pattern out here. Only wasn't able to bust through its highs. If you take a look at the trading session here from March the 4th, that high was at 1203.20. That level was tested. It was tested with lighter volume, was unable to break through that level. Now it's just doing a normal retracement. This says that the Russell 2000 very likely now wants to pull back to 1126.34, the 0.618 retracement of its move off of the lows from May 15th out there. So let's take a look at the daily time frames for those structures. Let's take a look at some equities here that are moving in the market. Let's get a feel for what's going on inside of equities that are moving. Let's take a look at, looks like we've got Priceline, PCLN.com, Priceline.com. It's off $35, down about 3%. Let's go see if there's any kind of volume inside the move lower so far this morning. It's down with 402,000 shares. It's got a B point that it's trading inside of. Well, it's just swing point now. There was a 1-to-1 A to B equals CD that it completed. Now it could be forming its next one to the downside. Why do I say that? Well, it's trading below its resistance level, which happens to be the support line, this unfair low, and that's at the price level of 12.35.20 out here. Take a look at the bounce that Priceline had, went right up to its market profile point of control, that area where it's most comfortable with from being both long and short, that 12.63.99. Yesterday it actually got up to 12.64.50. How does that work, folks? We just know that it does. Now, if we take a look at coming off the high out here being the trading session of May 30th, down to the most recent low, and that's on June 16th. It also did a 0.786 retracement out there. And that was at 12.68.93 was its price projection. Again, yesterday, 12.64.50 out there. So it's done a 0.786 retracement. Let's go ahead and get rid of the retracement. Let's clean this up just a tad. What could be going on inside of Priceline? Well, first it's traveling inside the swing point. It's a high-volume swing point. It's close to the swing point. The swing point was actually the next trading session on June 16th. Nonetheless, let's use the harder pattern for it to form out here. And that's the time frame here from June 13th. Looks like that low, because it's trading inside that candle session meaning the high is 1234.97, the low is 1186.64. Very likely that what Priceline is going to do is go test those lows out there. If it can break the level of the next session, that was June 16th. Now low is 1183. If it can break that with more than 751,000 shares, that will set up your next A to B equals CD to the downside. You say, what is that? The markets have the ability to form this little lightning bolt pattern here. That lightning bolt pattern is what we refer to as the A to B equals CD pattern. We can measure the move. We can use this to help us identify where it is that price is likely going to travel to. If it breaks 1183, if it does it with volume of more than 751,000 shares, it says you ought to see Priceline move to 1155.17. Is that where price has to stop? No. An A to B equals CD pattern forms a 1-to-1 A to B equals CD. That means the move from A to B equals C to D only 60% of the time. The other 40% of the time, it's expanding. And the expansions would take you down to 1125 and 1087. And the reason why that's important is because you do have an untested high-volume low inside of Priceline. That is May 8th, the low of which is 1087.26. The high is 1152.98. A close below that swing point of 1183 with volume, and that is where Priceline is likely going to target. That is PCLN. That's the leader in the clubhouse on the way down. We got Chipotle joining the fray out here. It's trading off about $14, down to 2.5%. Let's go see what we have going on inside Chipotle. Nice high flyer out here. It too now this morning trading below its market profile low. If we take a look at that or support, if you take a look at Chipotle, notice how, after coming off of its most recent lows back here in April, the green horizontal line, those unfair lows have never been pierced. That is, not until today. Volume thus far, 193,000 shares to the downside. Made a high out there with 140,000 shares. That was on Thursday. Double that to 280. Chipotle moving lower with expanding volume. 877-927-6648. This is TFNN. This is Steve Rhodes. We'll be right back, folks.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
Welcome back, folks. Dow's off 100 right now. S&P is down 11. NASDAQ Composite down 57 points out there. And for all of you eSignal 12 users, for everybody that's upgraded to eSignal 12, you now have Tiger TV as one of your media applications that is inside that trading platform. Here at TFNN, we do live programming each day from 9 a.m. to 6 p.m. My name's Steve Rhodes. I kick things off each morning. So if you want to understand what the futures are doing, where they're going and why, what patterns to take a look at, you can tune in on your show. You can just make that a part of one of your little windows out there, in addition to your charts and different feeds of favorite maybe hot lists and things of that sort. You can just simply add us. Of course, you can detach that window, put it on another screen out there. Live each day. It's an interactive program out there. Interactive data would make sense. We would have an interactive program. That means you can give us a call at 877-927-6648. We have hosts that use a whole assortment of tools and products out here to help us identify the market. So the nice thing is that each show is going to be a little bit different with regard to the tools that we use. So we're all about education. We'll teach you how to dissect these markets. We've got newsletter services. Mine is called Mastering Probability. You can test drive that. Comes with a 30-day unconditional money-back guarantee. I've got about 30 hours worth of additional educational materials contained inside the newsletter service. It's video programming. So if you're looking to understand how to read these markets, then go over to the homepage of TFNN.com. Click on my name, Steve Rhodes. That'll take you to a little sign-up page. You can test drive that for 30 days, unconditional money-back guarantee. It also includes an hour-and-a-half workshop on money management. And that's really the key to this entire business out here. This is a math exercise. This is all about money management. I will teach you some things that even the most experienced traders simply have overlooked out there. If we take a look at just kind of summarizing where we're at in the markets out here, we take a look at some of the different tools that I use out here. One of those gauges is the Euro-Japanese yen. Here's a 120-minute chart. We've got a bullish pattern here that has formed this morning. We're seeing a candle session that's going to end in about 4 minutes, 3 minutes or so. A little doji as we speak right now, but looks like it's trying to turn into a hammer candle. It's trying to hammer out a low out here. That would say that what we would see if there was some follow through in the next 2 hour session out there, meaning between 11 and 1 o'clock, some type of bullish candle as well, that would say we're going to go ahead and see a bounce in the marketplace. We would see a bounce in this currency pair. This currency pair, it is the secret used by great traders out there because it helps us to understand the direction of where the market is headed to, and this would say that this would bounce the 138.54, maybe 138.82-ish type level out there, but the candle session is not complete as we speak, and it also needs follow-through on the next session. However, you can see that the lows, that the bulls have been able to push off the lows very strongly with that wide lower shadow of that candle signal. If we take a look at the VIX index here right now, it's struggling at its 50-day exponential moving average. Nothing unusual or new there. However, if it does close above, we'll call it 12.10 today. The 50-day exponential moving average is at 12.07. If it closes above that, and it closes above that with conviction, here's what I can tell you. That currency pair or not, we're going to see some real carnage inside the marketplace because anytime the VIX is above that 50-day exponential moving average, that is what happens. That is the pattern. Don't get too hung up in what people call the VIX index as a fear gauge and that it being at lows, it doesn't mean anything, folks. When it trades above the 50-day exponential moving average, it couldn't provide us with better information. So stay tuned. Our man Basil Chapman, he'll be up next. Have a terrific Tuesday, folks. Thanks so much for joining us. I'll look forward to seeing you bright and early tomorrow morning. Take care, folks.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
You're watching Tiger TV.